So it's 8 o'clock, so let's get going. I'm Diana Blitz, and I am the college lady, but there are actually three of us of the college lady. Wendy Lubick, who just spoke for my families and Magda's families who do not know her, and Magda Moores, who is also on this call, is here tonight as well. So last year we did a presentation, and Jeff Levy, who is our host tonight, presented for us, and it was a presentation on FAFSA because you are new, Wendy. I'm whatever you're recording, it's echoing.
I'm muting everybody who could have been muted.
Okay. Anyway, so last year we did FAFSA because every year that with our students, we have new families, of course, and often our kids are the first kids to go to college. And so everybody needs information on how to complete the FAFSA and who completes the FAFSA and all the questions. This year is unique because legislation has mandated the Department of Education revise the FAFSA, and it is in the process of being revised. A few years ago, the FAFSA used to come out January 1st. And as you know, students who applied for early action or early decision, those applications are often due around November 1st, would hear from schools but not receive financial aid packages because the FAFSA was not even due until January, was not even available till January. Then families would fill it out and turn it in. So you couldn't make good decisions about your early decision agreements or early action agreements because you didn't know how much college was going to cost. That changed a few years ago, and it became October 1st. Now with the revised FAFSA, as we've tried to explain to you in broadcast emails, it will not be coming out until December. And we know that that's problematic, and the Department of Education knows that it's problematic, but there are so many changes, and as you can imagine, it's a technology issue that they have to rewrite program. And in addition, if and when the government shuts down, and it may shut down and then open and shut down, it could be delayed even further. What that will mean for your financial aid letters, I am not sure. Last week we were in college meetings in Baltimore, and many admissions people said that they would try to get families some idea of what they would owe when they send their acceptances, and we'll just have to see what's going to happen. We do not really know, but we wanted to give you a heads up, and some of you have children who are older and have used the old FAFSA, and some of you are brand new to this, so the revisions won't make sense, but just know they are in fact what you are going to be dealing with. So I'm going to introduce Jeff, who is can come on the screen. I don't know if you're coming, and I'm going to back up. Jeff Levy is an independent educational consultant like we are. In addition, he is a financial aid guru specialist, and also does that professionally. I mean, people hire him to help them through the financial aid process and financial, because there are a lot of questions that are more complex that he can handle quite well. And he actually teaches mini courses to people like me on financial aid that so many people in our profession have enjoyed from him and learned. So Jeff, I'm going to start off with this very fundamental question. Who should and should not apply for financial aid? And what are the pros and cons of applying?
Happy to answer that in just a second. But first of all, I want to thank you, Diana, and Wendy and Magda for inviting me tonight. I always enjoy speaking to families about this complicated topic, mostly because I was one of you not too many years ago. Before I was an independent educational consultant, I was a parent of two daughters who didn't know how he was going to afford sending them to college. That was the last writer's strike. I worked in the film business and was out of work for almost as long as this strike has put people out of work. So if I could learn how to understand this stuff, any of you can. The other thing I want to say before I answer Diana, we're going to leave time, I hope, for Q&A at the end, because I think that's when a lot of the best learning occurs. So I'll try to keep my answers relatively short. And folks, if you have any questions at all, hopefully we'll be able to leave 15, maybe 20 minutes at the end for Q&A. All right, to get to your question. Basically, everyone should apply for financial aid. There are exceptions to that, which I'll get into in just a moment. But if you think you may qualify for need-based aid, if you will have more than one child in college, you should apply for financial aid. And we'll get into some of the details of that a little bit later. There are many more reasons to apply for financial aid than there are not to apply. Those that maybe should consider not applying for financial aid, if $80,000 a year per child is not a burden, and even a loss of a job will not be a burden because you have ample savings or other assets that could see you through a loss of a job, then it's possible that you might not want to apply for financial aid. Students or applicants who are on the cusp of admissibility, it may hurt them if they are showing financial need, or even if they are submitting the FAFSA and other forms if they don't have financial need, because at the final stages of the admission team putting together their class on paper, they are beginning to look carefully at net tuition revenue. So in the final 10-15% of building the class on paper before those acceptance letters go out, they will look at how much will this student cost us potentially over 4 years versus how much will this student cost us potentially. So it's at the margins. If you are on the cusp of admissibility to begin with, that possibly applying for aid and showing some need could hurt. You're muted, Diane.
I'm looking at my next couple of questions, and I think your answer was fairly comprehensive in that I'm referring to the question that we sent our families a quick question about checking yes or no, I will be applying for need-based aid. And I think you've addressed that question.
It's a really common question. That question on the Common App or other applications addressed to the applicant, not to the parents. Do you expect to apply for need-based financial aid? It's really important that the applicant answer that accurately and, of course, truthfully. And here's why. If they say, no, I'm not applying for need-based financial aid, and the financial aid office receives the FAFSA or other forms, one of three things can happen. One, the financial aid office contacts you and they're already overworked, and boy, are they going to be overworked this year. It forces them to contact you to say, well, which one is it? Are you not, or are you? Second thing that could happen is they might, if they receive your FAFSA, they might ignore the applicants saying, I do not intend to apply for financial aid, and go ahead and process your FAFSA as if you are. Third thing that could happen, out of your control, they may do the opposite. They may say, well, they said, no, not applying for financial aid, and they may ignore your FAFSA. So at least insofar as it applies to institutional aid. They can't ignore it for federal aid, but most families do not qualify for any grant money from the federal government. So it's just really important not to send out mixed messages and to make sure that if the child checks no, that you do not follow up and send in the FAFSA. It's confusing. You're muted. You should just, you can remain unmuted. I don't think you're making it.
So just to make it a little bit murkier, Jeff, I'm a family. I'm confident that the sticker price of the college is not a financial burden to me, and there will be no significant financial hardships during my child's undergraduate years. And so there's no reason for me to submit the FAFSA or the CSS profile. So should wealthy families say no, I do not intend to apply for aid, just directly. And is it possible to say yes to some colleges and no to others?
Absolutely. So it's totally up to the family which colleges they list on the FAFSA and which colleges they list on the CSS profile. It will only go to the colleges that you list. So you may want to come up with a strategy of being a full pay, not asking for any aid applicant at a few schools where the student may be on the cusp of admissibility, particularly if that college is need aware and not need blind, and then go ahead and list other colleges where they have a stronger chance of getting in.
Makes sense. So for those who decide they will apply for financial aid, how, when, the forms, the dates?
Okay, and this gets back to what you opened with. This year is going to be more complicated than past years and future years. So let's start with a simple case. For applicants applying to schools that use the CSS profile, which is the other form, the FAFSA is used by every school. If you are applying for need-based aid, you must submit the FAFSA to every school you're applying to if you want aid from that school. But that's a federal form. About 150 institutions, typically the most selective, typically privates and not publics, but there are exceptions to that. About 150 undergraduate institutions use a second form called the CSS profile, a much more complicated, more invasive form that looks at your finances from multiple angles. For schools that use the CSS profile, that date has not changed. So that opens October 1st. And if your child is planning on applying ED, early decision, or early action, the financial aid deadline may be as early as November 1st. So you will have a month from October 1st to November 1st to get that CSS profile in. Now, if a school receives the CSS profile, they have far more financial information about you than they will get from the FAFSA, which doesn't open this year until December, they're telling us. So in that case, for early decision and early action applicants, they will most likely get a if they get accepted, they will probably get a provisional financial aid award. It can't be a final award because the institution doesn't have the authority to dispense federal aid, such as Pell Grants or federal student loans, but they can approximate pretty closely what the student might receive in federal aid. Wow.
I don't know what happened there.
Somehow I got muted. for those schools using the CSS profile, it will not be a problem getting the financial aid and a provisional financial aid award. The problem comes in with those schools that only use the FAFSA, which is most schools. They're still going to have their same early decision and early action application deadlines, but their financial aid deadline is going to be pushed into January, the earliest. So your child may receive an acceptance, but it may be several months before they get a financial aid award. There is no world in which an ED applicant is going to be forced to commit without first seeing their official financial aid award. So don't worry about that.
Okay. Let's move into some of the changes, the revisions in the FAFSA that's coming out. And let's start with siblings.
Okay, so there are a bunch of changes. Siblings, so by law, the federal form can no longer take into account the number of siblings in college at the same time. So up through this past year, it was a big advantage to have multiple siblings in college at the same time, because once they calculated the student's expected family contribution based on the parents' income and assets, if there were 2 kids in college at the same time from that family, each of them would have their EFC divided in half, divided by 2. So the total equaled, for 2, roughly equaled what it would cost to send 1 kid, what it would cost the family to send 1 kid to college. To me, that made sense, because the FAFSA and CSS profile methodologies, the formulas underneath them, they're just a measure of how much a family can afford to pay based on their income and assets. Folks, please keep yourselves muted. Very, very important. Thank you. That changed. They've done away with the division by the number of students in college for the consideration of federal aid. The question will still exist on the FAFSA. It's not part of the underlying formula, but the information is still there. So for those thousands of colleges that only use the FAFSA, they can take that into account if they choose. And I've already read that some colleges have announced that they are not going to change their policy. Other colleges, frankly, will change their policy, and it will become more expensive in terms of getting less total institutional aid. Let me put it another way. If there are 2 kids in college, it won't be like it was at many colleges where each child divides the expected family contribution in half. It will be something more expensive than that. So a lot of this is just up in the air and we don't know. Shall I move on to some of the other changes?
Yes, why don't we go on to divorced families?
Okay.
And then contributors.
Up until this year, in the case of a divorce or legal separation, the parent responsible for filling out their financial information on the FAFSA was the parent with whom the student spent more time in the year to date. That parent was called the custodial parent, the other parent called the non-custodial parent. That has changed on the FAFSA. It is now going to be the parent who provides more financial support to the child. So that will complicate things a little bit. I don't think there's going to be a great deal of verification of that, but just be aware of red flags. The parent who has provided more financial support will be the one who will be considered the parent contributor. on the FAFSA. Now, the CSS profile isn't changing. The CSS profile, even in the event of divorce or separation, is still asking the student to list both biological parents, any spouses that they have, and the income from both households will still be taken into account. So this change really applies only to those schools that do not use the CSS profile. What was the next question, Diana?
More contributors than one?
So the new FAFSA has introduced a new term called contributors. A contributor is anyone who has to provide information on the FAFSA. So the student is a contributor. If the student is married, their spouse is a contributor. If the parents are married filing jointly, only one of them will be a contributor. If the parents are separated or divorced, only one of them will be a contributor, the one who has provided more financial support. Am I leaving anything out, Diana, that you're recalling?
Well, I think that the clearest answer is that if you file jointly, you are with, if two parents, whether they're a step parent and the parent or the parents are filing jointly, they do not each need to be contributors. But if you are a step parent in the house, then you are a contributor and you're filing separately.
Yes, and filing separately, if yes, that is absolutely correct, regardless of what the prenup says.
Okay. Is there anything that widows or widowers need to know specifically? Is that been addressed at all? We're getting a question that's coming through like that.
So the FAFSA will ask the applicant, the student, what is the current, as of that day, marital status of the parents, and if the parent is widowed, then they would only be reporting themselves, even though the tax year they're looking at is 2 years prior. That income, the deceased spouse's income would be subtracted manually from and will not be reported because now this is a single parent.
Okay. So another FAFSA change is, it used to be, is the net worth of a family business. Can you talk about that?
Yeah, so there used to be what was called a small business exclusion. If you have a family business with 100 or fewer employees, the net value of that business, the equity in that business, would not have to be reported. Not true on the CSS profile. No matter how few employees, you have to report the value of the business. Now, the income that business generates, that's already reported elsewhere in your tax returns. So that's being reflected as, net income. But what they want to know is the net value of the business. If you were to sell it and pay off the debts, what you would be left with. And frankly, a lot of small businesses, if you can't find a buyer, if you can't sell your business to somebody, then the net value of that business is zero.
I'm going to swing back to divorced parents for 1 second. Two questions. What if a parent refuses to complete the FAFSA? And then will each parent see the personal financial information of the other if they're each a contributor?
Okay, so on the CSS profile, so for a divorced family, the CSS profile is the form that is asking for financial information from both households. The FAFSA would ignore the parent who
is the lesser contributor.
Is the lesser contributor.
or
There is
support?
no intermingling at all of the divorced parents' financial information. Here's how it works. The student, and let's say in this case, their mother, completes the CSS profile. One of the questions the student has to answer is the name of the other biological parent and their email address. That parent will then, once the CSS profile is submitted, that other parent, the non-custodial parent, will be sent an email by the CSS profile and given a link to complete their own CSS profile. There's no, they don't share information. That information is aggregated in the financial aid office when they're determining their expected family contribution.
Okay. So with regard to the FSA ID, we informed our families last week on Friday that the link was live to get your what they're now calling an FSA ID, so that you could because it takes a couple days. We've now been told that if you go there, it is in progress again, so it's no longer live. But if I have a kid in college already, do I need a new FSA ID?
So you the parent.
Yes.
My understanding is no. Once you have an FSA ID, so let me back up. Any contributor to the FAFSA, anyone who has to enter their financial information, will need their own FSA ID. If you already have one, you don't need to get a new one every year. But the student will need their own, and all other contributors will need their own as well.
Okay. Okay, so we're getting a lot of questions about merit aid. Specifically, I want you to, if you could, talk a little bit about merit aid and how that is different. But the main question is, if families want to be eligible for merit aid, do they have to complete the FAFSA and list that college on the FAFSA, or is that a separate deal?
This is one of the most popular questions I get. Last year, out of the 1,000 colleges I was familiar with, 2 of them required submission of the FAFSA for merit aid consideration. 99.9% of colleges will tell you that anyone who applies will be, if it's a school that does give merit aid, because there are schools that don't at all.
Right.
But that just the submission of the college application is all that is required for merit aid consideration. There is a myth out there, and it really just, it has taken hold and it won't die, that you have to submit the FAFSA for merit aid consideration. Not true. Last year, the 2 schools I knew about were Fordham and Virginia Tech. Other than that, no. Now, there are specific scholarships that may be listed on websites that are partially need-based scholarships. But they would be they're over and above the need-based aid that the student would automatically get. Some of those say you have to submit a FAFSA to be considered for this scholarship. But in general, the answer is no. But to play it safe, go onto the most years I say go onto the college website and see what they have to say. But this year there is a lot of misinformation. There are still websites that say the FAFSA deadline for early decision is November 1st or November 15th, and that's a leftover from last year. There are still colleges that have not begun the discussion of how they're going to be handling the new FAFSA. So it's a tricky one, navigate it carefully, but hopefully in the next month, we will be able to learn if there are any colleges that require the FAFSA for merit aid consideration.
Mm-hmm.
I doubt it, particularly because of the late release of the FAFSA, which could be as late December.
So before I want to get to a big question for you, I want to just say we have a lot of DC residents here, and for DC residents who are applying for to state schools around the country, we have, as we talked to you about last year, DC tag, and you have to complete the FAFSA for DC tag. That is a fact. But the FAFSA, the DC tag application does not even come out till sometime mid-February, late February, and that's when you would start it. And then you've already applied to colleges. You've already decided whether or not you're going to be completing a FAFSA for your schools or not schools. And on the FAFSA itself, I will tell everybody, you can list up to 20 schools on the revised FAFSA for, please don't hear that as apply to 20 schools. You can list up to 20 schools on there. I'm just saying. And, but if you're not applying for need-based aid, you've made a decision not to do that, you do not have to do that early on when you're applying. For DC tag, you can complete a FAFSA in February and add that school to there for DC tag purposes. If it comes back at all to your school of choice, which you may have or may not have already heard from them in terms of admission, you can explain to them that's for purposes of DC tag, a local contribution from the government here, and it's not for financial aid from the school. But then again, you can also do a DC tag, that whole thing in March, and when application's already done, so there's never any confusion, or the end of March. But a lot of your high schools will be pushing you to do it faster. Just the schools will understand it if they question, you make it clear what that's for. So can you tell us what a need-based financial aid package would look like?
Absolutely. Think of it as three distinct sources of funds, and two of them are counterintuitive. The first, so when a financial aid office packages an award, the first dollars they want to give the student are not their own. It would be federal dollars. So if a student comes from a family with very low income, there may be Pell Grants or SEOG grants. Those are for low income families. The majority of, for families earning more than 60 or 70,000 a year, and there are exceptions to this, but for the most part, those families would be priced out of Pell Grants. So the first federal dollars would be federal student loans. Counterintuitive. How can you call that financial aid if I've got to pay it back with interest? Well, that is one of three parts of the financial aid package. First dollars awarded, $5,500 for a freshman in federal student loans. You can turn that down if you want, but you're not going to make it up with more grant money. Second part, again, not institutional dollars, is work study, campus employment. And that's not money they're giving you. That's an approximation of what your child might be able to earn if they worked for 25, 26, 27 weeks at roughly minimum wage on campus. If that number's too high, that's bad. It means they're figuring out that your child may need to work 12 or 14 or 16 hours a week, which is way too much in my opinion. So that number is usually around $2,500 to $3,000. Not a gift, an approximation of what they will earn in paychecks by working. Then, after those dollars are, quote, awarded, what's left of the student's need would be made up, or some portion of it would be made up in institutional grants and scholarships. And that's the gold ring. That's what you want, is as much as you can in institutional grants and scholarships. Some of the wealthiest schools with the largest endowments have replaced federal student loans in the financial aid award with additional institutional grants. So that's great because you could then still borrow federal student loans if you want, because you haven't hit that 5,500 maximum for a freshman. It just means that there's more coming into you in the form of institutional grants. So those are the three main sources of funding. And the other half of that ledger is, okay, this is what we're giving you. This is what you have to pay. And the total of what the parents have to pay added to what the school and government are providing should equal the total cost of attendance. That was fast. I hope it was clear.
Yeah. Unfortunately, we should make it clear to families that there's no rule, no legislation that mandates colleges financial aid packages or award letters look the same. So once you get one, that does not mean you'll be able to understand and follow the other one as easily or whether it was difficult or easy. They're all different. And so if you've applied to 12 schools, you may get 12 different looking letters with 12 different numbers.
That's absolutely correct. Although I heard yesterday that there were a bunch of colleges made an announcement that they're standard, a handful, I don't know, 20, 30, 60, that they are going to standardize their financial aid award letter. I do want to just add one quick thing. There's also no legislation saying that a college has to give a student 100% of their need. Right. So in shopping for colleges, it's if you have moderate to substantial need, the figure you must be looking for is what is the average percent of need that college meets. So Johns Hopkins meets on average 100% of need year in, year out. I'm not thinking of another DC area example, but NYU.
Franklin Marshall does as well. That's close to DC, kind of.
Right. But on the contrary example, NYU historically is meeting for all undergraduates, meeting 65, 68% of need.
Correct.
Leaving the family with a great, what's called a gap between their need and what they've been awarded. So very important to shop wisely.
Right. And many of our families think about that, who have a lot of need, that you want to apply to colleges that meet close to 100% of need. That's critical. Okay, so we're at a point where I just to be clear, in terms of the FSA IDs, each contributor needs one. Does the student needs one and a parent?
Yeah, yes. Whoever is a contributor, the parent, the student's spouse, the parent's spouse, as you said earlier, whoever is contributing their own information on the FAFSA needs their own FSA ID.
Right.
There is one other change that
Okay.
I forgot to mention that is kind of important. May I mention that now, Diana?
Please.
Up until this year, there was always a question on the FAFSA. Has anyone paid money or paid expenses on your behalf? Has anyone given you money or paid expenses on your behalf? And grandparents are the typical example, anyone who isn't otherwise listed in the FAFSA. And that was always a problem because that technically is reportable. So if, grandma gave the child 30 grand as a gift to pay for college, that would be reportable, untaxed income on student income on the FAFSA, which gets killed in the formula at a rate of 50%. So that would raise that child's EFC, if it's $30,000, by $15,000 because of that gift. That question has gone away. So it's a gigantic loophole now that families with some generational wealth can certainly help the child out now, and there will be no ramifications in terms of financial aid as there used to be. That's the FAFSA. CSS profile still asks the question, so just be careful.
Right. And that includes the 529 plans from grandparents if they have one for a kid and all that.
Correct.
As long as the grandparent or the parent's name is on the FSA on the 529 plan, that it is parent under the parent's assets or the grandparent's asset, not the kid. So it'd be taxed differently.
Yeah, if someone else other than the parent. So if a parent owns a 529 savings plan, that is reported in the FAFSA, but parent assets, they are penalized at 5 to 5.5 cents on the dollar. So it's always good to save. If you're a parent, always good, because you're only getting penalized a nickel for every dollar.
Mm-hmm.
If a grandparent owns a 529, even if the student is the beneficiary, that is an asset of the grandparent, not of the student. And if they now under the new FAFSA, if they give some of that money annually to the student does not have to report it.
Okay. I'm going to go to a question here, Jeff.
Yeah.
I'm looking into various scholarships and learned that my child's first choice school counts any scholarship money we bring to the table toward the institutional grant amount. Is this a common practice? It's something of a disincentive unless there's no institutional grant offered, right?
Great question. Typically, but there is no one way that this is done. But most often, an outside scholarship awarded to a student would first of all reduce dollar for dollar what's called the self-help portion of the financial aid award. That refers to work study and federal loans. So let's say the federal loans are $5,500, which they would be for a freshman. Let's say the work study portion is $2,500. That's a total of $8,000 in self-help in the financial aid award. If this outside scholarship, and they rarely are big, but if this outside scholarship is for $10,000, then $8,000 would be they would wipe out the work study and the federal loans portion, and then they would reduce institutional grants by $2,000.
Yeah. So that's tough.
It's tough. There are advantages. I mean, it's something of a disincentive. Obviously, it's much better for a full pay family who's not getting any financial aid. That $10,000 now reduces their out-of-pocket cost by $10,000.
Correct.
Doesn't do that for a family with financial need. I think that's unfair, but it's not a complete disincentive because it wipes out the loan. You could still go and borrow that $5,500. So it's not terrible, but it's not good.
Financial aid based only on income, or how do 529 accounts, Social Security, retirement accounts, homes, things like that? How does that work?
Well, I'll try to get through this as quickly as possible. So they're looking at all of the above, except certain kinds of Social Security. Like if you're Social Security disability, I don't believe is reportable, but they're looking at income, they're looking at assets. Income is the biggest driver of ability to pay. Assets are, as I said earlier, parent assets are not penalized to a high degree. Student assets, because there's a student section and a parent section when it comes to income and reporting income and assets. Student assets are penalized at 20 to 25 cents on the dollar, because they figure, what else does a student have to spend money on but, giving it to us? but parent assets, not a, better to save. And if anyone tells you don't save because you'll get, it'll get wiped out in the financial aid calculation, not true. So yeah, those are the two main drivers. Demographics come in a little bit, like what state do you live in, and what is the standard of living in that state, but that has a small effect.
And what about in terms of the CSS? What about your house?
Oh, and home equity, that's right, you asked about that. The FAFSA does not look at equity in your primary residence. If you have rental properties, yes, that's an asset that's reportable. The CSS profile, you will be listing the equity. They'll ask you a bunch of questions about your primary residence. What did you pay for it when you bought it? What is it worth now? What do you owe on it? And essentially, they're going to subtract what's the balance of the mortgage from what you say it is worth. If you be careful not to red flag that. If you're living in, I know this area, if you're living in Beverly Hills, and you're going to Harvard Westlake, and you're reporting that your home can only sell for $450,000, that would be a red flag. So don't cheat yourself. Maybe look at Zillow, look at a few other, know the comps in your area, then maybe subtract 10% from that, because who knows, tomorrow there can be, a major problem in your area. But that would be, so the equity is determined, and then it gets very complicated what portion of the equity would be considered an asset. Some colleges consider the whole thing, all of your equity, an asset. Some will only look at a portion of it. We don't have the time to get into those details now.
Okay. So it looks like we're out of questions. Do you think we need to, are there other changes for the next year that they're already talking about? Is this gonna change again?
No, no, this took 20 years to get through Congress, and the stars aligned at a moment in time to get this law passed. There is no way that there might be little tweaks, but there's no way that the FAFSA is going to change fundamentally. No, this is the one where, for better or worse, this is the one we're stuck with. I'll say this, I did go through a demonstration of the new FAFSA. It will be easier to fill out, but that idea that was circulating for months that they're reducing the number of questions from 104 to 36.
Right.
Not true. If there may even be more questions now, but the experience of filling it out will make it simpler for the most part for most families.
Right. I'm looking here. Wendy's telling me that the questions are rolling in, but I don't see them.
I can. Earlier you said if you can pay around 80,000 per year, filing a FAFSA and for need-based aid may not be desirable. Is the 80,000 based on your existing savings or based on a discount of your savings? You mentioned 5 cents for each dollar combined with your income versus expenses. All I was saying was, if you're in an income bracket and have substantial assets which make an $80,000 purchase what many private institutions now cost, if that's not a burden for you, if you can come up with that, even if you lose your job tomorrow and can continue to pay that for each of your children for 4 years, then I don't see the point of submitting the FAFSA and the CSS profile. But if that amount of money, if that price tag is a burden, and you're looking around for how to save some money on that, then you should certainly apply for financial aid. Does that answer the question, do you think, Diana? Or
It
did I
does to
miss?
me, but I'm not sure. I'm guessing he will come back. If it isn't, if parents have 529 accounts for siblings, does that count as an asset for purpose of this year's applicant?
Great question, because that just changed. So it used to be, and again, we're talking about the FAFSA now, not the CSS profile. But on the FAFSA, that is another change. And thank you for asking that. They will no longer consider a 529 or any other savings plan for whom a sibling is the beneficiary. So giant loophole, that's all I'll say. That is not, if the student who's applying for financial aid is not the beneficiary or the owner of that account, that is not reportable any longer in the FAFSA. CSS profile, yes.
Right.
Great question.
So just to be clear with everyone, if you didn't catch it, you can, the FAFSA is available for any school you apply to. You can apply for need-based aid through the FAFSA. The CSS profile is about 150 schools. So when Jeff is talking about, they may ask you that in the CSS profile, for example, about your assets, your home equity and things like that. That's 150 schools. There are many schools that are FAFSA only schools, not CSS profile.
I see another excellent question here. Someone asks, what if the parent's income got slashed in 2023 due to a job loss? How does that get reported? So that's a great question, because when you are applying for financial aid, they're looking 2 years prior at your income. So anyone who is a senior in high school now, who will be starting in college in 2024, fall of 2024, they are looking 2 years prior at your 2022 tax returns, which will, by the way, automatically populate into your new FAFSA. So the question says, well, what if 2023 was terrible? What if my income dropped? Well, that is the best single case for sending a letter of professional judgment, also called a letter of special circumstances. I would quickly follow up submission of the FAFSA and CSS profile with this letter to each of the financial aid offices, explaining, hey, my 2022 income is not a good indicator of my ability to pay. Please take into account the following facts. I lost my job due to no fault of my own in 2023. My year-over-year income, estimating the next 2 months, will be $85,000 compared to $285,000. That gives the financial aid administrator all of the information they need to be able to not use 2022's income and use 2023's instead. But unless they have that information from you, they are forced by rules and regulations to go with 2022. Great question.
Someone has asked if you have the money to pay for some of the semesters for a couple of years and you have that saved and you're ready to go, but will run out before graduation. Should we apply for aid now or wait until we're tapped?
So again, it depends. About a third of colleges and universities will honor a submission of a FAFSA and or CSS profile for institutional aid, even if you did not submit it as an incoming freshman. But about a third. Another third will say, now you're submitting the FAFSA. We gave you an admissibility bump when you applied back then because we thought you weren't going to be asking for any financial aid, and we need full pay families like you. We're going to impose a 1-year waiting period on giving you any institutional aid. And then the final third of colleges will say, sorry, we're not going to even consider you for any institutional aid because you did not submit it as an incoming freshman. That's why I say, unless you can get through all 4 years, regardless of what happens with your job or with your assets, if you can get through all 4 years, maybe you've got a good reason not to apply for financial aid. If you can't get through all 4 years, the smart choice is to submit as an incoming freshman and each subsequent year.
I agree with that. Okay. I think we're about there. And it's 8:55. We did a great job. Anything else, Wendy, that I'm missing, Magda?
There was a question about high medical costs.
Definitely something that should be reported in a letter of special circumstances. There's going to be a certain amount that is kind of assumed in the formula, but if there are high medical costs, if you're taking over the care of an elderly relative, and there are maybe that impacts the ability of a parent to work because they have to stay home to take care of an elderly relative, definitely things that should be itemized in a letter of special circumstances, and you may get some credit for that. Yeah.
Okay. Anything else? Okay.
I'm not seeing anything else coming through. I'm just want to say thank you, Jeff. And thank you, Diana, for a masterful job.
Jeff, thanks so much.
Thanks to everybody who participated tonight.
Thank you guys for having me. I really
Thank
appreciate
you,
it.
Jeff.
All right, Jeff. Take care. Good night, everybody.